Hi everyone, welcome to the MyG Trades channel. My name is Johar and welcome to another episode of the Global Market Outlook. So last week we saw quite a bit of a relief rally in the Indian market. Let's see what global indicators are telling us about the market direction for the coming week. So let's start by looking at the Brent crude, which is crude oil. So if we see here, we saw a correction in the crude oil prices last week. If we switch over to the weekly chart, we saw a correction of close to 4.76%. So that's a positive sign for the short term, but in the long term, the crude oil price is still staying above $100. And if it stays in this zone, we could be in for a very, very high inflationary environment. So in the long term, it's in the medium term, I would say it's still not positive until these issues with Russia and Ukraine are resolved. If we look at gold, gold is also testing its previous all-time high resistance. So this is also not given a strong breakout. So there seems to be some confusion in the market, I would say. People are not too sure what are the impacts going to be of all these sanctions that have currently been put on Russia, and that is causing, I think, some sort of a confusion in the market of exactly what to do. If we look at the US dollar continues to be extremely strong. It's on a very strong upward trajectory. It increased by 0.6% last week as well. This clearly shows that a lot of the money is moving back to the US. So it's going to a safer haven, which is the United States. So, all the selling that we are seeing from FIIs in India, they're probably selling a lot of equities and riskier assets in other emerging economies as well. And all that money is being moved back to the US. So if we look at the USD INR also, we can clearly see that the Indian rupee is also getting weaker and it's currently at its all-time high right now. So if this gives a fresh breakout, that's going to be a negative thing for the Indian market. If we look at how the US markets are doing, they are still weak. We have gotten a closing last week below this major support line, which it was testing multiple times, and the market and the US Dow Jones Industrial Average has given a closing below that. So that's not a great sign. If you look at the S&P 500, same story over there. This was a resistance line, a support line which was tested multiple times. It gave a closing below that. Now our next support moves directly down here for the S&P 500. If this is also taken out, then we can see a fall directly up till this zone, possibly, which is 3,600, which is again not going to be really good for anyone. If you look at Nasdaq, which is more IT heavy, this is still taking support over here in this area which we had marked. So that's a positive sign. Nasdaq is more tech heavy, so most of these stocks are trading at very high premium valuations. So if these companies manage to stay in this zone, then that's a good sign for the market in general. That will have a positive effect on Dow Jones and S&P 500 as well. If you look at the US volatility index, that is also currently above 30. So that's also not great. The market is still very volatile. There will be huge intraday upswings and downswings. So it's a very difficult time for traders right now to make a position. Now let's have a look at our own market. If we look at the Indian volatility index, that is still above 25, not very great. If we look at majority of the Indian market, we have normally stayed below 20, right? And whenever the market is below 20, that's when the markets have been very stable. And whenever we see a spike in the volatility above 25, that usually means a very negative sentiment for the market. So still there's a lot of fear in the Indian market. So it's good to be on the cautious side. For long-term investors, it's a good time to add and accumulate good stocks. But for traders, we have to be very cautious of the kind of positions that we take. If you look at Nifty, Nifty saw a good relief rally, I would say, last week. So this was the head and shoulder pattern that we had identified. a couple of weeks back, and we saw a nice bullish engulfing candle, as you can say here. Oh, sorry, we can't call this a bullish engulfing candle right now because it has not crossed the previous week's high. But this is a good strong Marubozu candle that we can see, but it's still not being able to cross this resistance at 16,800. And if I switch over to the daily chart and put up my moving averages, we will see that the market is still trading under the 200-day moving average. So until unless this zone is crossed of 16,800 to 17,000, we cannot be sure about bullishness in the market. Until it's, as long as it stays below this, there is going to be a weakness in the market. We might end up just consolidating in this 1,000-point range, or we could potentially break this if the conflict further escalates between Ukraine and Russia. Let's have a quick look at the sectors. So let's look at metal. Let me switch over to the weekly chart. So metal had a good week. It gave a closing very close to its all-time high, so that's a good sign for metal stocks. Banking sector still looking weak. PSU banks are also weak, but much better than the private bank sector. IT stocks are doing well, with the Indian rupee becoming weaker against the US dollar. That's a good thing for IT stocks because a lot of our IT companies deal with foreign companies, so they get paid in US dollars, so they'll get more rupees for every dollar that they earn. So that's a good sign for Indian IT companies. That's why they are moving up. FMCG pack saw a good recovery last week. That this is a nice bullish candle that we are seeing here. It gave a closing right at the previous week's high, so this is a good sign. So FMCG stocks are looking good. Media stocks are also sort of looking good, but they are very volatile. I mean, just look at the moves they make. The up moves or the down moves are very large, so it's a little confusing right now in media stocks, but they are definitely looking stronger than the rest of the market. Infra stocks are also doing okay. Reality stocks are also doing okay. Auto stocks are not doing that great. They have broken this low, and then they sort of gave a closing again at this support line, which is now a big resistance for the auto sector. Energy stocks have also closed at its close to its all-time high, so that is definitely strong. So metal and energy is doing really well. Consumption is again weak, with this high inflationary environment. Consumption stocks will probably do not that great because the things get more expensive. There are going to be fewer people buying their products, plus their margins are also going to get squeezed. So from a medium term perspective, for the next 6 months to 1 year, I believe consumption stocks might underperform the market. Financials also again not doing well. Pharma has done exceptionally well last week. This is a proper bullish engulfing candle. The last 3 weeks of down move has been recovered in just 1 week. So pharma is definitely something we should look at. If we look at the broader market, which is CNX 500, the broader market is doing um, we saw market wide rally last week. Now whether it lasts or not, we have to see that, because if you put up the 200-day moving average here as well, the entire broader market is also under the 200-day moving average. So until unless the entire broader market breaks out above 14,500, we cannot be sure of bullishness right now. So still the stance is remain cautious. We have to still maintain our cautious stance in the market. Things are still not completely, I would say, okay. Commodity prices are increasing, inflation is going up. Plus, this week there is the US Federal Reserve announcement where they will be hiking the interest rates. So that might also cause some jitters in the market. And as usual, we are completely at the mercy of the Russia-Ukraine news that comes along. So if there is one negative news, the market will go down. If there's some positive news, the market will go up. So as of now, it's a very confusing state. So as long as the US dollar is going up and the crude oil prices are going up, it's not good for the equity markets. If these two things start coming down, then we can see some stability coming into the markets. So keep these two charts in mind, which is the crude oil chart and the US dollar chart here. US dollar needs to start coming down. Uh, because once the dollar starts coming down, that means that money is now flowing out of the US and back into emerging economies. So that is a positive sign for countries like India and other Asian markets. So I hope you found this video helpful. Thank you for watching, and we'll see you again next week. Goodbye.